right, guys, so welcome. Get a round of applause for our panelists, please. With some enthusiasm, would be fantastic. So first of all, thank you all for being here. Thank you for coming, and thank you to the dear panelists for also being here. So the topic today is CBDCs and the application in Web3, or at least the role of Web3. I guess before we get started, I'd like to get a brief introduction from every single one of you. Let's start with you, Jen, see what you're up to right now and why you're here.
Sure. So I'm a co-founder at Law Tech Asia, which is basically an organization that's driving thought leadership at the intersection of law and technology. And Web3 is one of my key interests. And I've been practicing as a tech and fintech lawyer. And now I'm trying to start my own startup for financial inclusion. So that's me.
Fantastic. Wonderful. Great. My name is Sheraz Ahmed. I'm the managing partner of Storm Partners. We're a 360-degree solutions provider. We've helped large enterprises, banks, and also governments adopt and get into the Web3 space. And I'm also the co-executive director of the Crypto Valley Association based in Zug. The Crypto Valley is one of the largest crypto hubs in the world, just over 1,600 crypto and blockchain companies within Zug. And we've welcomed a lot of delegations from, let's say, the Thai government, Indian government, and even the US to kind of give them some education around the whole regulatory environment around crypto, but also around kind of CBDCs and the like. So yeah, I'm looking forward to discussing this topic a little bit more with you all.
Hello, everyone. This is Chris from U2U Foundation. So I'm the founding advisor over there. And so we actually, building a layer one out there and also have a venture builder model to support, Web3 startups out there to build a product and go to market expansion. So I have experience working across ASEAN country for the past 8 years in the crypto space, not like the traditional space. So very good to be here again and with the panelists, yes.
Hi everyone, I'm Max. I used to be head of research with Cryptonary, which is a research and education company. I left that around 6 months ago, and I've set up a research-based marketing and advisory company for small cap crypto projects.
Fantastic, great to meet you all. And I'm Karim Rafa, one of the blockchain crypto advisory team in KPMG here in Singapore. And we focus on primarily transitioning Web2 companies to Web3, but everything from asset tokenization to tokenized loyalty points, as well as infrastructure overhaul and government projects such as CBDCs, which is why we're here. So I guess I wanted to keep this a bit more of an open flow conversation between the five of us. So by all means, if you want to interject or follow up on each other's questions, feel free. Let's start with, first of all, the benefits of CBDCs and what that really means in a digital economy. We've gone from fiat to wallets on your phone to pretty much anything can be digitized and used seamlessly in most economies. And I guess, what do you think CBDCs have to offer and what the benefits really there are? Jen, let's start with you.
Sure. I think right now we're seeing that across various countries globally, there's actually like a race, in a sense, to come up with their own version of CBDCs, whether it's China with digital yuan, and even in Singapore here, Singapore has been exploring this with purpose-bound money as well in the past year. So I think some of the advantages of this really is, I guess for some of it would be having the currency on the blockchain, having a more digitalized version of fiat, facilitation of cross-border transactions as well. And I think from, a centralized finance perspective, another benefit of this would be, right now there's so much hype about DeFi, and this is also the centralized authorities also taking back, and integration from Web 2 to Web 3 also, putting money on the blockchain as well. And there's also much talk about how some governments are trying to use this to promote financial inclusion in their economies too.
Fantastic. Any follow-ups, Sheraz?
Yeah, sure. I definitely believe that CBDCs have a great benefit towards a lot of, let's say, the back-end financial institutions. I think what we're not seeing is what are the benefits for retail, kind of, let's say, the audience here. And I think it's often one way there's a little bit of skepticism around it, and the benefits are often for those large financial institutions that not many people kind of really care about to a certain extent. But then it's just going to make things more efficient. It's going to make
Wait up, Sheraz. I think we need to mic you up again because.
Fantastic. Okay, maybe better now. Yeah. Okay. Great. So I'd see there's going to be way more benefits for finance institutions and kind of like the whole kind of like public side. But when it comes to retail, I think we could do a better job at being able to educate further on the importance of CBDCs and how it's going to impact everyone's lives. We see that it's going to have huge benefits on counterparty risk for large banks, the central banks and the likes. And then how that's going to impact retail is definitely to be seen. And so I think that's definitely one which I'd love to talk about today as well, is kind of understanding how we can bridge the gap between the two, because we're seeing a big push on the CBD side for the benefits that is held from those large institutions, but let's say little on the kind of retail side and how it's going to impact them as well.
Hello? Okay, that's better. I think from my side, I agree as well, because especially for country like ASEAN-wise, right? I don't know if you guys have chance to step out of, like, let's say Singapore, right? In some country like Vietnam, for example, 5 years ago, sometimes we can't even transfer money out of the bank during the weekends, and then after 5 p.m. or something like that, because that's where all of us go home, right? So sort of, money on the digital platform that can easily live 24/7, and people can do without much, restriction in the middle is the dream for a lot of the ASEAN country to pick it up. And especially, for the near future of a lot of digital asset on there to get on the platform, like NFT, tokenization of real estate and stuff like that. So you have the currency that work well with these assets will be a complete, complement to each other. Yes.
For me, I think the biggest impact of CBDCs outside of what can be achieved through stablecoins and things like that purely comes down to the efficiency. Through a CBDC, you can have, whether you like paying taxes or not, you can have taxes automatically deducted from businesses, which could save a lot of time. At the moment, you've got suspicious activity reports, which is when you do a transaction over £10,000 or dollars or whatever it is, you have to submit a report each time. This takes thousands and thousands of man hours and can be completely eliminated by the use of a CBDC, which can have that integrated.
Fantastic. You kind of stepped into my next topic right there. That was fantastic. So you might want to follow up on that straight up. I guess the major difference between CBDCs and stable coins from an application point of view, and also I guess from where we're headed, there's been a big crackdown on stable coins, especially in our US counterparts. And I guess where the regulators step in and at which point and why.
As in, where do regulators want to control stablecoins?
Yeah, I guess where the direction is heading from on one hand, because right now I guess we've seen more of a crackdown on one end with some very clear or grayer, say, regulations, especially in Singapore and the US, on where stablecoins are going, and I guess where CBDCs step in to replace that or complement that to some extent.
I think it could be either or. You could look at it either way, but I do think it's going to be a complement, because if you have CBDCs, there needs to be an alternative. Stablecoins at the moment aren't necessarily in their final form. The reason the regulatory crackdown is happening is because there has been historically bad assets backing them, and there has been issues. It might be going too far now, but the basis of it is a good reason. I think having a CBDC and then stablecoins will complement each other, because stablecoins can act almost as a retail bank. They can be an alternative still within the same system, and the CBDC can be the main currency. The question is whether regulators will allow that to coexist in that way.
Fantastic. Let's back and forth this a little bit. So Chris, by all means.
I think hello. Just to add on what he shared, I think one of the important elements would be that we haven't talked enough about the readiness of the banking infra in the local, market as well, because, and I think that will decide either the CBDC or the stablecoin would be preferred in some country, because not like Singapore, a lot of the country out there, the banking system they use within the same banking system in the entire country are completely different, and they don't even talk to each other. So it's just a matter if the country, the government can push for all of these banks to pick up the stable coin first or the CBDC first, right? Whatever easier and cheaper and effective will be pick up early, that's the option to go to. But I agree with you as well. It should be as complement to each other. Yes.
That's interesting. Shiraz, comments, I guess, on your end. And I'd also like to ask you who you think would issue stablecoins, because right now these private companies that have no banking licenses are issuing stablecoins, or corporates are issuing stablecoins. But what about bank-issued stablecoins? How would they fit into this?
In terms of, so will bank-based stablecoins, so
Yeah, are bank-issued stablecoins a better alternative, I guess, than privately issued ones? And how would they complement the CBDC ecosystem?
are they a better alternative? So I think they'll have to be governed by the central bank ultimately. And I think pointing on towards what Chris was saying just before, I think even the central bank digital currency issuance, or kind of some of the pilot projects, are even going too well and too fast. I mean, if we look at what Thomas Moser of the Swiss National Bank said a couple of weeks ago, is that Switzerland will have a CBDC in pilot within the Swiss Digital Assets Exchange by the end of this year, which actually is only open to institutions, but that will be operational. And ultimately, SDX has had limited adoption so far. And so for me, what I think is going to be quite interesting is to say, okay, well, is having that now integrated within SDX going to add a lot more value to the users of the platform? Or does there need to be more ability to integrate CBDCs into some of these platforms to increase the adoption? It's not just because, well, we have this regulated digital currency and now everyone can use it. If they don't understand the ability of using it, or even the technical capabilities, it's going to be difficult. But then even if we look at other kind of digital currencies around the world, the digital ruble just came out yesterday in Russia. Many other pilot regimes are kind of happening all over the world. I think they're not being really spoken about today because very few individuals are going to benefit from it, at least from the retail side. And then even, let's say, on the institutional side, to Chris's point before, I think there's just not been that kind of bridge that's happened yet to be able to connect the two together. People are like, oh, okay, it's great, but how is the bank going to use it? So to your question, maybe a bank-led digital currency will be easier, because I think banks as private organizations are to a certain extent profit money driven. And so they're going to focus on that go-to-market strategy and that product market fit, if you want. And so they'll make sure that if they're issuing a digital currency, that their user base is going to be able to use it, because if not, they've spent millions of dollars to develop it for nothing. So maybe there's going to be more of a use case there, and then having that maybe regulated by the central bank itself by proxy. But it could have a better fit, definitely.
Fantastic. Jen?
So I think one key distinction between CBDCs and stablecoin would be who is backing it. So I think that's why actually there's also some regulatory interest in rolling out CBDCs, because for stablecoins, I think last year we saw how stablecoins might not be so stable after all. And that was also why I think the MAS also issued a clarification as well as on the licensing and characterization of stable coins, for instance, whether they're algorithmic backed stable coins, and how now they would be treated as digital payment tokens instead. And so I think it's also because of that there's greater regulatory interest in coming out with CBDCs and being able to, I guess, bring the coins to the masses as well in that sense. Yep.
Yeah, very fair. I guess in very simple terms, CBDCs still rely very much on being interoperable, right, at an international level. And getting a lot of countries to agree on one protocol is practically impossible, but interoperability is still somewhat possible. I mean, Swift has done it in a quite handy way, right? I guess, what do you think, in just in a short sentence, what do you think the biggest challenge is for regulators, other than working together, when it comes to coming up with CBDCs?
I think it's also about how there are different types of models for designing CBDCs, like whether it's hybrid or single. And because of that, I think that also affects the interoperability issue. And because of how each country decides to build and what they want to use it for in their economy, there might also be concerns beyond interoperability about, data sharing and other related concerns as well.
So when we look at interoperability within the financial world, we don't necessarily need to bridge every single currency together. You just need that one top currency that all of the other ones are interoperable with. And today that's the US dollar. Everything is pegged in the US dollar. I think if we bring that to like more digital currencies, here where there's a lot of struggle is that within the US, there is no current, let's say, emission of a central bank digital currency that is pegged to the US dollar. So now there are interoperability concerns because there's no kind of, let's say, master currency that everybody is able to kind of exchange with. A little bit like, for example, back in the 2017 days of cryptocurrency, everybody, if they wanted to exchange one crypto to another, they'd always pass through Bitcoin, essentially. So everyone, you'd always, if you were trying to get into any altcoin and you were trading on any venue, you'd always go through Bitcoin. And in the whole, like, let's say, traditional financial world, everyone passes through the US dollar. And so now I think there's a really big opportunity there because now the US dollar, there's not really kind of, apart from the stable coins, USDT, USDC and the likes, there is not that kind of mother currency at the moment. And so now there is a need to kind of have some form of interoperability within the various other kind of foreign currencies, or somebody else might take that throne. So I think there's a big opportunity there. I think the US is not seizing it, at least for the moment. And so I think for anyone that is developing either kind of private digital currencies or maybe even like an alliance of some of the big banks, and I think that's a really, really big opportunity for the future of, be it financial inclusion, but also for the digital financial world.
I think to continue with the idea that me and Max put together, I think, right? I mean, probably each of the country, they will work with, for example, USDT as a global CBDC, but I would like to adopt my own local CBDC as well. So they have two separate, like CBDC working together. So one is more for like local standard, and the other one is like maybe trading with the local global countries, for example. But I also want to share a very interesting insight that I think the moment that all of the currency is going to the CBDC level, right, it means that it's complete transparencies and showing off balance sheet and everything. I don't know if all of the country are ready and up for that yet. So I think it would be a work in progress and depends on the preference of each of the country on how far they want to go with the transparencies and everything as well.
On the note of interoperability, I think there was a couple of reports that came out recently. One was the BIS. I can't remember who the other one was, but they discussed this issue. And one of the reports suggested a unified system, which is all the global CBDCs, all digital assets, essentially. It doesn't say in explicit words, but essentially all digital assets on the same platform, which I don't think realistically is ever going to happen. There's no chance that that's going to be, the organization globally just wouldn't allow it. The other called for a messaging system, which is kind of similar to SWIFT, but would obviously not have the costs. If you want interoperability between CBDCs, which obviously you need, I think that's the only feasible way of it happening, is through some kind of a unified messaging system. And I think that kind of shows the need as well for stablecoins, as we discussed earlier, because you need to have a way to transact outside of a unified system.
No, very cool. Couldn't agree more. And I mean, there are quite a few out there, right? UDPN is one. They have essentially a general interoperability system or general bridge between CBDCs and stablecoins. And Swift is actually working on a blockchain-based messaging system. So, shout out to Swift if they're around. I guess interoperability between stablecoins and between CBDCs and intergovernment is one thing, but let's bring it back to, I guess, real applications. Like, how do you guarantee interoperability or build interoperability between end users? So either between banks, or how do you guarantee interoperability between vendors and retail users?
I think it's almost built in, essentially, to be honest, in terms of having a CBDC. because of the way that it's operated, regulated, and run, the interoperability kind of comes part and parcel with it. It's an ability to transact between people who are on the same system, essentially.
But that would imply a global full shift from.
You mean internationally?
Yeah.
I think that comes down to the messaging system. It needs to have a system that's centralized, that's able to convert into the different currencies. I think it's never going to be a dystopian future where we have one currency that purely rules them all and you only trade in that. There needs to be the ability for FX markets to take place. And if that can be done automatically through the CBDC system, then the efficiency would be amazing.
Chris, I see you nodding, man.
I think for me, right, I think my perspective will be that the CBDC will be more at the bank-to-banks level, especially in ASEAN, from my observation, because that's where the testing and the trial can take place without harming or affect the retail behavior so much in the beginning, but depends on how the result and the return on collaboration between the banks. I think the local central bank we decided to go further or not at the retail level. That's my opinion.
Can I just interject really quickly on there, just since we're doing this conversationally? I think in terms of the interbank idea, there's currently more retail CBDCs being built than there is interbank ones. It's definitely way more appropriate for interbank CBDCs to exist. But I think the focus is going to be on retail, and we're seeing kind of less developed countries like Nigeria turn into guinea pigs for CBDCs. And that's, I think, where all of the issues are going to come out in the wash, and then they'll adopt them in the major economies.
Very true. I mean, most of the currently live CBDC products, out of the 114 currently in development, I think there are 9 live ones, and all 9 are, I think, Nigeria, Ghana, was it Barbados? Small impact.
Yeah, and in Nigeria, after their first year of launching, the adoption of the CBDC was only 0.5%, and even still it's very, very small. What they've done is they've forced Nigeria to be a leader in crypto, with over 50% of the population regularly dealing with crypto because they don't want to deal with the CBDC and trust the government, essentially.
Yeah, I think it depends on the payment rail, right? I mean, how is that CBDC used by retail? I think we've been working a lot with Visa and MasterCard lately, and for them to be essentially the payment rail of the financial world. If retail could use their bank card today and pay with a central bank digital currency through it, they would do so without really thinking twice, because it's just tap and pay. So, and if they could do so with paying less transaction fees or paying less for their, be it Revolut account or any other bank account, they would do so. I think the public's perspective is what's most efficient and cost effective is the option that they'll take. So, of course, if you need to connect on a platform and use a central bank digital currency to buy something and it takes more time and it's more cumbersome, no one's going to use it. But if you can just kind of tap and pay, I think they definitely would. So once that kind of side of things has come into play, which it is, I know that Visa and MasterCard are looking into these as much as they can, then we will have much more adoption of it. And then we'll start seeing kind of the interoperability side of things there, where those conversions can happen in a more dynamic manner without there need to be any counterparty risk. It can just be done on-chain very, very easily and directly.
And for me, I believe that whether interoperability can be achieved and the success of retail applications of CBDCs also really hinges a lot on the extent of public-private partnerships. So here in Singapore, over the past year, the regulator has been partnering with some private companies in trialing and doing some pilots. And they've even released a report about it and even some open source code. So I think it really depends on the way a country wants to develop it with work and how the public-private partnerships take place.
Very cool. No, I agree with all of you. I guess I always hinge on the impact on the existing financial industry. And I guess dystopian future would be one major CBDC disintermediates all banks, and we're kind of stuck in that loop. I guess what would be your approach to best handle this step by step? So what would you do first, second, third, and I guess what's your best and worst case scenario?
Do you mean in terms of the steps to prevent the dystopian future.
Essentially. Unless you're into that.
I think the dystopian future of one central bank digital currency is unlikely. So I don't think there's necessarily going to need to be steps to avoid it, because the chance of getting there, I know global power has enough weight politically to do that, and no one's going to collaborate between because there's too many undercurrents politically. But the idea of a dystopian future with CBDCs existing, I think, is quite likely, purely because when you have a CBDC, you're trusting a government, which is fine and well right now. If you give it to the US, you might not like the surveillance they do, but they're not going to go all too far. But then the next elected official, you never know who it's going to be. They hold the power. Donald Trump might come back and freeze everyone's money. You never know.
Chris, comments?
I think I would say about almost the same thing as well. So it depends a lot on the trust of the local, adoption user to really believe, the CBDC being produced by my own government. But again, the governments always can set up a scheme or a governance scheme to let the CBDC only touch a certain level of the digital economy. For example, I think one of the area that I like country in ASEAN would like to try is pretty much on that e-commerce digital business only, right? It stay there, but it doesn't get out of there, right? So to see it, if companies and people and retail user can off-track transaction and stuff like that, and just to show people that's exactly the transparencies and the effectiveness if we can go there before they actually can touch, some other vertical of the digital payment as well. So yeah.
Will we see a centralized central bank digital currency? I think we will. I mean, if we look at kind of the way in which things are coming to be now on the macroeconomic terms, you look at BRICS that is forming, you look at the downsway of the US dollar. I definitely believe that there will be either one or just a few. Then I think to go towards the point that I mentioned before of efficiency, we want to be as efficient as possible. So maybe there will be one currency that will be more liquid, and we'll all worldwide have a consensus around more trust, and thus we'll kind of go more towards maybe that one. I think there'll be others that will exist. And due to the fact that, let's say, a CBDC by nature is more kind of globalized and ease of access is there, potentially it'll be easier to adopt as well from that standpoint. Now, I think it really depends on some of the alliances that end up coming out, and who trusts who ultimately within that. So I think it's interesting times, but a lot of it is going to depend on the macroeconomic standpoints and how kind of some of the turbulence in the world that's going on now kind of ends up
Yeah, I think it really depends a lot, not just about trust, but also in terms of application. So I think all our discussion about interoperability and all that will be one of the main barriers to even achieving or for that dystopian future to be possible. And I think the other thing might also be user adoption, whether they're comfortable with having their transactions being so, I guess, open and accessible to a stakeholder that's not just their bank, even though that is definitely in the regulatory interest as well. And so I think all that also boils down to how much people want to switch away from what they're already used to using right now. Like what, I guess it's a what's in it for me kind of mentality as well. That's a barrier to, I guess, reaching that dystopian future in the very, very, very immediate near future.
I guess my biggest fear would have been a centralized CBDC. Actually works on a country level as well. Banks get fully disintermediated. There's only one essentially central bank that controls everything. Monetary policy disappears, and now we get entirely controlled by purpose-bound money. So you can only spend in sectors that need the current push right now because we're in that sector or that crisis. But hey, fingers crossed.
I think as well, like a very likely dystopian future would be in terms of payments. Like the ability to block payments is something that would be inherent with the CBDC. And at the moment you have DeFi and things like that, which aren't regulated, is quite easily possible, and in fact likely, that a government might require every time a new business opens, you register as an authorized seller, and then the currency can only be spent within authorized sellers. That wouldn't come in the first version, but it's something that would be easy to implement and could happen in later versions of CBDCs.
I guess this kind of leads into the role of CBDCs in e-commerce, well, actually just in general in e-commerce. No major question, but I guess advantages, disadvantages of CBDCs to be used, I guess, in e-commerce and comparison to current models. Anyone who wants it.
I think one of the issues back in the traditional payment system, especially in Asia, is cash is still pretty much everywhere in a lot of the Asian country. So when you cook, hello. When you cook together the e-commerce and cash, sometimes it's a lot of deficiencies for these e-commerce operators to run their business. For example, people never pick up their order, and because they put on cash on delivery, right? For example, and some of the shop, the merchants can basically behave and perform quite poorly because of that nature. But once you compulsory asking everyone to adopt CBDC in the platform, so the money goes where and stay where, you can easily track if each of the merchant, they are really at the good level of performing or not, because you taking the money going to your account, we can track that it's you, right? Because you have a unique wallet that it should stay there. It's not like one day you're setting up a cash, like a merchant account, and then you delete it, and then you set up another one to trick people, right? So CBDC, in a way, again, bring transparencies into a lot of the business that it's touched on. So it really depends on some of the business out there, like e-commerce, to pick it up. And I like that's why I suggest like the e-commerce is one of the vertical.
Perhaps I could just add on to that. With this added transparency can also come added efficiency. So I think right now we see that a lot of retail and e-commerce platforms, they do have mechanisms for consumers to maybe raise a dispute or raise a chargeback, maybe for unauthorized transactions and things like that. But the problem with that is that all this process is very untransparent, and it can take ages because there's so many stakeholders involved, from the customer to the merchant to, say, MasterCard, Visa, and the platform itself. And because of the many layers, intermediating this and resolving this dispute would take really long. But because now, with the element of CBDCs, and also which then enables the usage of smart contracts and everyone coming together and having more transparency, this could really lead to more efficiency in such dispute processes, and that could also increase the retail adoption of CBDCs too.
Couldn't agree more. Sheraz, comments?
No, I think everything was said related to e-commerce.
No, nothing.
I'd add only one thing to it, in that with the benefits that we see from CBDCs in efficiency and like reporting and things like that, it comes with like a counter argument. To play devil's advocate, you have potential guardrails that can backfire. For example, if you have your own identity, like your personal wallet, and they say you can only spend money at these places, you can authorize what you spend at, essentially. You can also block other people from spending, so you can't spend from someone else's wallet, essentially. This is a safety rail that you could put into place that could easily backfire, and it's the same with the efficiency. Chargebacks, you could have bad actors. If it's a really quick system who come in, I think part of the reason it takes so long at the moment is because it's through a step you need to be 100% sure, because you can't then charge back a chargeback.
No, very fair. I guess another point that comes to mind for me is the privacy issue, right? If you have a single centralized wallet where you spend everything, which essentially comes from, and you interact with all of these different vendors, how easy is it to fall into that future where everyone has your exact profile based on your spending habits, right?
Yeah, and that trajectory also seems a bit opposite of how, I guess, global laws for data regulation and data privacy are moving in, which is more towards having more autonomy and control and privacy over data. And now, on the other hand, this development would go against that.
Yeah, I mean, according to the CFTA survey that just came out, privacy is one of the biggest concerns, and cybersecurity being the second one. I think it does come down to trust as well. How much do you trust your government not to survey everything that you're doing? But then, is it in their best interest then to survey certain things? Probably. Is it in your best interest? Probably not. So will they do it if they need to? Probably. I mean, it's like all of the phones that you have in your pockets. If the government officials want to understand where you are, what you're doing, etc., they have veto access on that and will do it and have done it in the past. So I think it's kind of it's bound to happen. Now, what can we do to kind of prevent that? I think little, to be honest, apart from kind of being involved and kind of actively trying to educate ourselves about kind of these areas, and then speaking up a little bit and being like, well, we would like to put some guardrails in place to have certain transactions be more private and the likes. Now, I think the unfortunate one for all of us in this room is, I think, albeit the fact that we could do that very heavily, I don't believe that in certain areas of the world that will really happen. I think there are certain countries where it can, and then it's about our decision to adopt that currency or not. I think, to the point that we were discussing earlier, if nobody adopts the central bank digital currency that is heavily surveyed, well, then they're not going to be surveying many people. Now, it depends on if they enforce that or not, and the likes. There are alternatives. So, I don't really have much of a solution there, to be honest, because they will do what they want to do, and they have done that in the past. Now, I mean, you could look at the other side of the coin and say, well, if you're doing nothing wrong, well, then there's nothing to hide. But then you go into this whole rabbit hole as well. So, I think it's a very, very tricky topic. And I don't really believe that there's that much of a simple answer, apart from trying to sway governments to be a bit more ethical. But that's a whole nother story.
Yeah, I think that CBDC is the end of my privacy, probably. So where I spend, where I go, would be really scary. So I don't know. I mean, if that days come, I really don't know. I mean, like it's you trade off a lot of privacy for the good efficiencies and everything, but it's hard to imagine that pretty much customer behavior and everything will be on the table for these government to be able to see and everything. Yeah. And not only retail user, right? Business user as well. So now all of the payment that you make, the relationship with certain merchants, vendor can be shown quite effectively as well. So people can, so we get used to the ideas that, once we're using trading platform or anything, right? We have these analytics tools. So now suddenly the government have the analytics tool to see all of this as well. And it's quite scary.
I feel like we're going down a dark rabbit hole here. I feel like most of us are actually pro CBDCs, right?
I mean, the positive light is that there is general consensus around the fact that there are going to be CBDCs and then kind of like private currencies, such as you can consider, let's say, Bitcoin and the likes, that are going to be there. So the people have the power ultimately. Let's not take that away. Like we can decide what we do. It can be imposed on us, but throughout, let's say, history, we have proven that it is the many that show might. So there is, let's say, Bitcoin that can be used, can be adopted, and where you do have, let's say, your privacy towards it. There will be other forms of stable coins and currencies that we can use. So it's not all darkness. But I think it's really there whereby there is this really big battle that is going to be fought now, where I think we lost the Web2 battle, which was kind of like the internet and privacy over our data through social media and the likes. But the Web3 battle is kind of still going on now. Kind of experts kind of estimate that by 2025, we will start to have kind of real adoption of CBDCs. So ultimately, we have the next kind of 2.5 years, 3 years to really kind of decide amongst us, okay, how much is going to be the use of CBDCs related to other currencies. And you do have the decision, but it's kind of one of those things whereby, are we just going to be like, well, let's go with the easiest model and adopt Meta's metaverse? Or are we going to go with a more difficult model where we do have our own privacy and we do have, let's say, other things that are kind of bound to us, but then we're giving up other sides of kind of UI, UX, efficiency, and the like. So yeah, it depends on how lazy we actually want to be about it.
Building on from what you're saying there, in terms of the ability to escape the CBDC system, if you are at a point where the government launches a CBDC, you say 2025, we're going to start seeing real adoption then. By that point, we're looking 2 years into the future. We're in a very likely place for the user experience of crypto to improve massively and it to be a lot easier to adopt. And it is an escape hatch, and it's one that we're likely to see used quite a lot. As I said, in Nigeria, it's been driven adoption massively. And what governments could accidentally do through these systems, if they do take a dystopian shape, is just force people outside of them. And this kind of level of competition between the two as well would force a better product to come out at the end result. And maybe it will stop these abuses that we see in privacy across at the moment.
Yeah, I think they're definitely playing on that dual-edged sword, right? Where cash is kind of bound to the physical realms of, okay, I have cash in my pocket, I have to spend it here today. But when it comes to the digital world, well, the internet is rather interoperable, even though, I mean, not globally. But when it comes to digital payments, you can just be like, oh, well, a digital naira is not doing me justice. I can go for the digital Swiss franc, digital euro, and just accept that in a much easier way than it would be to accept, let's say, Swiss francs or euros in fiat cash terms in Nigeria. But the digital currency, if you can just exchange that very easily, then it can be done. So I think there as well, the governments will play this dual-edged sword. It's like, okay, well, if we're too stringent and we're not kind of, we don't have ease of adoption, or we're not being, let's say, well balanced for our population, they could just choose to go elsewhere.
Fantastic. We were supposed to open the floor for Q&A. Oh, fantastic. We got an extension. We were supposed to open the floor for Q&A, and we did get an extension. So I guess if anyone has a question, please raise your hand fast. We have about 3.5 minutes, so 2 questions max. Don't be shy. Really? No questions? This is amazing. Everyone understands everything about CBDCs. It's crazy. Well, I guess we got 4 minutes for closing statements, so 1.5 minutes each, by all means. Jen, do you want to go first?
So I think we've said a lot about the risk as well as the advantages of CBDCs. And I'm quite excited to see how, I guess, countries and regulators around the world take a stance in navigating this, hopefully together with private actors as well. And we'll see that maybe in 2025, when CBDCs are more for mass retail adoption, that perhaps it wouldn't be as dystopian and as scary as we think it will be.
Yeah, I mean, just as a parenthesis, my first time in Singapore, I'd love to get like just an understanding, like a consensus from the audience on if you would adopt a central bank digital currency or not. Can we just get a quick raise of hands for those that would prefer a central bank digital currency over a private one? If you want to raise your hands for CBDC over something else? No? Or if everyone's just sleeping? No, I mean, okay, cool. I mean, so that's few. So everyone else would go for something more private?
A lot of head nodding, not a lot of hands, but yes.
I think it's going to be interesting to see how that happens, right? Because as we were discussing before, if it's imposed as well, it's going to be interesting to see that battle play out between governments and the public sector around, what is imposed and what is not. But cool.
Yep, I think especially for ASEAN, I think CBDC is a little bit long reach outside of Singapore. But I think something would take place in the middle for CBDC to take place is sort of a good use case and example on how, for example, like blockchain token work in some cases. For example, loyalty points in a certain way, because loyalty point is another, like less governance, like type example of CBDC, for example, which government does not control. Let people have fun and kind of see how it's work in a certain way before they actually going for the big shot, which is a CBDC. Yes.
I think overall people are very vocally against CBDCs at the moment, but it's going to come in a beneficial form. So we're going to see things like, for example, faster payments are kind of an early version of a CBDC. They're showing you the benefits you can get from a CBDC. The FedNow system, they've claimed that maybe that's a US system for instant payments. They've claimed maybe they won't need a CBDC because of this system. It's just kind of building up to getting that CBDC. And once it comes in, it's going to come with clear benefits that are going to make it a lot more difficult to decide whether to actually adopt the CBDC or not when you can directly benefit by adopting it. I think we're already in a dystopian era where you get surveilled all the time. So realistically, by doing a CBDC, they don't really have any more information unless you transact in cash every day, which most people don't even use cash these days. So it doesn't change too much. The major key and what I think we really need to do whilst we're going into this system is to allow the competition to thrive as well and to consider building up. Even bank stablecoins work, but stablecoins in general and use of those is going to be one of the top tools for fighting against bad policy with CBDCs.
And maybe if I just ask kind of like a trick question, because everybody said that they were going to be using private currencies, but if you were offered by the Singaporean government or any government $100 in free cash to use this CBDC, I don't know if the same answer would be the same. I mean, if we look at WorldCoin's adoption as well, I don't know if you've seen kind of around the world, but people are lining up to get their free $50 for their eyeball to be scanned and kind of give away that data. So ultimately, depending on the benefits that they end up bringing out, if they're like, oh, okay, well, I'm going to give you a free $100, I think very few are going to turn away $100 to not use it. And then after using it was like, oh, well, this is quite easy. And then they'll start topping up and then they'll be more and more used to it as well. So there is this kind of trap that might be there as well. So, yeah.
Can I share a quick insight to Sheraz because he's not from this region. So basically, ASEAN-wise and APEC-wise is a very good region to pick up these kind of promotion. When the promotion is out there, we grab it, and after that, we're not using it anymore. So yeah, so if there's promotion, we're using it. If not, we don't use it. So yeah, so it's not that straightforward in some of the other region like what you have seen in Europe and other stuff. Yeah.
I do think, a quick note on that as well, is that we're likely to see not just like free money, but tax breaks if you're using a CBDC or something like that. And in that case, you're turning down free money consistently, and then you may as well use it. It's going to be incentivized.
Agreed. I feel like CBDCs are coming essentially no matter what. It's a great tool. It's a great use case. Possibly not straight away for retail CBDCs, but definitely free trade zones or free trade agreements that use CBDCs as an infrastructure and a medium for transfer, essentially. Moving away from the king dollar and moving to something that's more mutually agreed upon. But we are out of time. We're actually 2 minutes over time. So can we get a big round of applause for our speakers here? A big round.